We have right now encountered another buy the rumor, sell the news. IBM is going to report earnings. IBM has never been this overbought. Since it's been a publicly traded company, going back on this chart of year 1996, we had a monthly overbought situation at 90.68. The 2000 downtrend, it was at 56%. And that's because we had that correction and then we had to move back up. However, back in the 4-month topping process of 08, before it finally collapsed, that percent DS was 79. We were roughly at 82. Here we were at 78. And there we were at 85. And here today, we're at 91. And we're right up at the all-time high of the topping ranges. Granted that IBM has done extremely well as a publicly traded company in America. No one's saying that they haven't, because we're not saying that. And yes, it's had a buy signal, and that's why people have stayed in the stock. That's that monthly buy signal that we talk about. And you can see what happens is that in the short term, we would look at trading IBM, and basically, if I go out to June and I'm going to look for a $120 put below the market. Hold on. Here, let's just take a look at the put for a monthly level. Am I deflated or am I inflated, guys? And that's $11 below the market. Am I inflated or am I deflated? And this contract here is a July put. Am I inflated? Okay. Do I believe that the second half of the year has a big problem? Even though we're changing our view a little bit more after what Obama did? You're darn right. So when I look further out, I'm looking that IBM is going to come back down to earth. And yeah, I pay more money to have that. I can also take a look at an April 120, which is even less money. And am I on a monthly level? There were $12 over here in 09. Am I inflated or am I deflated? How much of my risk is out of the trade for an April 120 put? How much? I can't hear the trader. I have a lot of risk that has been taken out of the trade. I am deflated. I have gone down 1, 2, 3, 4, 5 months in a row. The put option has ended down and continues to go down. And I've let all of this go out of the way from $12 down here. Do I have a lot of risk, traders? All right. Here's a put option that expires in April. 4/17. How many months out is that? That's 90 days away, I believe. That's 60 trading days. This put option and IBM closed at, let's see where IBM closed. IBM closes at 131. This is a $130 put that expires several months from now. The put option, as you can see here on the tape, was as high as $18.30, and that was on 9/1. That was September 1st of 2009. October 1st, the high was $14.20. November 1 was $14.75 on this particular strike price. How about this one? On 12/1, the high was $9. And just recently, the put option on the high was $6. But guess where the low is now? It's down, the low is $4. I have come down several months in a row, and basically, let's put IBM in this little watch list of ours. And I'm going to put the 130 right there. I'm also going to take a look here at the I'm going to look at the earnings expiration. There isn't much traded on here. And that's right at the current strike price for February. And that's roughly at, this is the 440 one now. That's many months out. You pay up for time, volatility. But because IBM right here on the monthly level happens to be on a monthly level, as I pointed out, is that we have hit 91.18 for Christ's sake on the monthly chart, between being overbought and oversold. And on the weekly chart, well, let's take a look at the weekly indicator. It's 89 and it's still rising. The main thing that we would be focused on for the longer position, and we could go a little bit higher, but we would take advantage of it. And they report earnings coming up, and look, the trend is great, but we have hit cycles here on the RSI that are at extreme, that when you want to be in them before they turn. You don't want to wait till they turn, but you want to see where that's going to top out before the turn happens. And this is a great trade. And last quarter, the people that were here watched me short IBM. And at that time, I was shorting and buying a 130 put, and yes, that was back over in here. I think. No, it was back over somewhere. No, it was right here. Back in the October earnings, I shorted the stock, and the stock went down $10 in that earnings report. Right here. Bam. That was that monthly move now. I can show you on a weekly. I'll be happy to. Back in that time frame. And that was over in here. Bam. Straight down. It was a $10 reversal, and then they came back, and we got out. And that was its last earnings report. And now we're even more overbought as to what they got to say. So that's another great trade. A trade, what is the great thing about the trade is even if there was some volatility spike on a gap with the earnings, because it's at 91.8% on the monthly overbought, it means that the gap wouldn't be sustainable, and we could actually take advantage of it and buy some more. If we wait for after the earnings report, well, then what we could be buying now at the cheaper price is not cheap. And then they gap up the put option ahead of time, and we're not in it. The risk parameter is that even if it went against us a little bit, this is in our favor. Because it is. This is truly in our favor.